What is up, gang? Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. Just as I stated last week, NIO has popped and popped big. We're up over 6%, 6.19% to be exact, representing a $3.61 gain over the course of one day alone. In today's episode, I want to talk about why the surge happened, whether news emerging from HQ will send yet another jolt into shares heading into next week, and then I'll finish off by giving a price prediction, closing out January, and moving into Q4 earnings slated for February. We have a lot to get into in today's episode, but before we get it, Webull has improved their promo. They are now offering 4 free stocks worth up to $3,700. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This is a complete no-brainer. Webull is a 0% commissions trading platform and offers some of the best analytics in the game. Soft runs soon, guys. Do not sleep on it. Check out my Patreon page if you haven't already. I will be posting every single one of my trades moving throughout 2021. I finished 2020 with over a 50% ROI. I'll be releasing more content behind the scenes, quicker updates. Check that out. The link is in the description if that interests you. And without further ado, ladies and gentlemen, let's get right into it. All right. So NIO shares had a stagnation in the past few weeks after a surge, which is completely normal. Remember, when looking at a stock's trajectory, it's best practice to zoom out and look at overall trends and not get too caught up in day-to-day volatility. I typically see NIO investors just absolutely losing their minds when shares pull back. Don't worry about it, guys. Zoom out. However, over the course of just a few trading days, NIO shares are up over 10%. I want to start off by talking about what's going on here. Why all the volatility? Well, a fundamental aspect of NIO currently is just how much of a spotlight is on their company and their stock. It is routinely one of the highest trading stocks on the entire market, and with the bullishness on EVs as a whole, a democratic clean energy government entering office, and Tesla shares having exploded in the past year, investors are not shockingly looking for the next big company. As I stated last week, I thought NIO shares sitting around 55 would make a solid buy, as I thought the next analyst to initiate on NIO would mark a buy rating as the prices had consolidated. Well, look at what has happened. Just as we have seen time and time again, analysts' buy ratings drive up NIO share prices faster than virtually any other catalyst, and this time is no different. I find it funny how a company can release phenomenal fundamentals, great new products, increasing sales on a monthly basis, and these of course do move valuations, but above all else, the mass quantity of investor interest comes following analyst buy ratings every single time. I personally like being positioned ahead of these buy ratings to then benefit from the surging share prices, but I don't know, that's just me. Alright, let's get into the rating itself. So on Friday morning, January 22nd, analyst Martin Huang from Japanese financial holdings company Nomura initiated coverage on NIO with a buy rating and a price target of, get this, $80.30. I do think this is the highest buy rating as of late from a major financial analyst. Correct me if I'm wrong, but I personally have not seen a PT above 80 until now. Wow, did investors absolutely go off on this news. Even from its current valuations, this PT would mark a 22.85% gain, and investors were eager to get in on this. We saw moving volumes skyrocket and shares surge more than 6% over the course of one day. So why did this happen? What does analyst Martin Huang like about this company and their current approach? Well, he states that he likes NIO specifically for its, quote, Tesla-like top-down approach, unquote, to its product cadence. What does this mean? Well, product cadence is a company's ability to continually release new exciting products at well-planned times, keeping investor and consumer interest near all-time highs throughout the course of the entire year. If you've followed NIO for some time now, you will know they are exceptional at this. They are consistently releasing new information, new specs, new products, new partnerships, better positioning themselves for the coming landscape every step of the way. This is bringing in more and more investor interest. Their product cadence also relates to their initial business operation and trajectory, and this has been playing out flawlessly from a sales standpoint. What NIO did was essentially emulate Tesla's first approach. NIO started with a premium product, a high-priced luxury SUV, the ES8. This is a beast of a vehicle, has 3 rows of seating, and since then they have continuously released increasingly consumer-friendly products. The following 2 SUVs were consecutively smaller, and now with the launch of their upcoming sedan, we can see this whole lineage and thesis of continually bringing consumer-friendly products play out perfectly. The reason they did this was that margins are much more attractive on premium vehicles, especially for a startup company. It's easier making fewer high-priced models off the start than it is to make affordable products in quantity. So the idea here is that high-priced early models will help fund the production of more affordable models to follow. We see this playing out perfectly as we see a shift from the ES8 dominated sales to sales dominated by now their newest SUV crossover, the EC6. Although the margins aren't as robust, NIO is able to sell more of these vehicles, and this is why we are continually seeing an increase in deliveries month after month. Now this also helps keep investor interest at all-time highs. Huang continues to state about demand and the fact that it's even there as a bullish catalyst for NIO. He states that, look, consumers are willing to pay these high prices even amidst a bruised economy for premium SUV models. Consumers could be paying similar prices for units of a more established company and legacy brands, but they're instead choosing to go with this young, new, exciting company, NIO. This is showing mass interest on an overview scale for NIO as a company and shows that NIO's brand equity and company as a whole are continuously growing in credibility. Remember, the more units sold, the more credibility will typically grow, and NIO is no exception. Finally, Huang touches on NIO's battery as a service and declares it as, quote, a revolutionary concept. Battery as a service is able to reduce the barrier to entry point, increases consumers' choice and flexibility regarding prices and NEDC ranges, lowers recharging time at swap stations, and allows for a competitive advantage when compared to the traditional plug-and-charge method. I also think it brings with it a ton of brand equity, but that's a different story altogether. Huang backs up this $80.30 price target using a comparative method against Tesla shares and its current price to sales of 26, and then uses a 25% discount for NIO on this figure. I do think this is quite a speculative approach to setting price targets, as NIO and Tesla, in my point of view, cannot be superimposed onto one another. They are such different companies, operate essentially opposite from one another, but analysts don't seem to care about this, and resultingly, investors don't either. There are also rumors emerging that NIO will be using its massive cash position to build their own factory in the coming quarters to begin production on their ET7 model, while remaining in partnership with JAC Motors to build their first-gen models, the ES8, ES6, and EC6. I will be closely following this and relaying information to all of you as soon as I catch wind. I do think an announcement of this would shoot up share prices. Alright, moving to a price prediction. I do think we will hit all-time new highs either this coming trading week, after first seeing share prices likely consolidate. Why do I think this? Well, for a number of reasons. Firstly, as we move to close out the month, investors will increasingly anticipate NIO's January releases. There are many factors working on what NIO will be able to deliver in the course of January, but here's why I think we will have yet again another record release. Although we usually see vehicle sales dip in January, Li Bin, NIO's CEO and founder, previously stated that JAC Motors will have the capacity to deliver 7,500 units throughout the course of the month. Now, whether this was with double shift mode activated or not remains unclear, but considering in December they had only stated delivery output capacity of 5,000, yet were able to deliver 7,007 with double shift mode activated, tells us two things. One, the demand is there, and two, they can feasibly push past what they have stated in delivery output if need be. NIO is willing to do everything and anything to continuously grow their delivery number on a consistent basis. They realize how important it is to be able to show investors consecutive months of delivery growth. The primary aspect holding back deliveries currently is their supply strain with their partners at JAC. I do think they will need to vertically integrate, at least for their ET7 in the coming quarters, orders to be able to meet demand. Now, we have typically seen analysts initiate buy ratings and raised PTs after NIO has recorded record delivery months, and I personally want to be exposed to these valuation gains prior to the actual announcements themselves. So I, for one, am purchasing more shares if we dip below 60 this coming week. I think shares will escalate due to the anticipated January release, and secondly, I think shares will increase due to anticipation of their Q4 earnings released in February. I've previously stated that I think the company will have knocked the quarter out of the park. I will have a full breakdown of my Q4 predictions in the coming days, so make sure you subscribe if that interests you. All in all, gang, it remains a very enticing time to be a NIO investor. What a ride this has been. All the way from $3 a share to now, this has been incredible. Don't forget about the Webull promo, 4 free stocks worth up to $3,700. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This is a complete no-brainer. They offer some of the best analytics in the game and are a 0% commissions trading platform. This offer ends soon, guys. Don't sleep on it. Check out my Patreon page. Thank you so much to all those who have already pledged. It really means the world to me. I will see you all in the next video. Take care. Happy trading. Cheers.